This is our Forex blog for April 3rd, 2012, and because all the currencies are linked with the same color, I can click on this button right here, and when I move one of them back, they'll all move back. That way we can start them off at midnight. We statistically compare every currency to every other one. The dollar and the yen are the two main currencies that people trade the bottom ones against. And the histogram on top is made up of 5 of our best statistical tools we've developed over the last 6 years. 3 of them measure the direction the dollar, in this case, is going, and 2 of them measure the intensity. One's on a bar-by-bar basis, and the other one's on about a 30 to 45 minute statistical intensity, measuring the average volatility over the last 20 days to today's volatility. So anytime it is red and it's at or above the 80 level, it's extremely weak. Underneath that, we have the daily, weekly, and monthly trend. This is our new pivot score, which the beautiful thing about this is when you add it to your charts, it will display what the level is historically as well as in real time. The previous daily, weekly, and monthly trend tools we used worked great in real time, but did not go back and paint historically the statistics. So when you see some strength in the dollar now, if you just brought the software up, you would see green for all the way back, and you wouldn't have realized that the dollar was extremely weak for most of the day until maybe around 4:30 it started to lose some of its weakness. So basically, the easiest and best trades are when the majority of the time frames all line up. If you have strength in the dollar, you can certainly buy the dollar versus the weakest currencies at that time. But because its daily, weekly, monthly trend is weak, you should be careful. You're better off looking at the CAD here, where it's strong in real time around midnight. The daily trend is very strong, the weekly trend. The monthly trend is slightly down, so that means it can easily change to up, which it does here. And you want to trade that against, one that's the weakest. The Australian is very weak, and that's probably the most highest probability trade is to look for sells in the Australian CAD. Now, this is not a currency that I leave running overnight, so I will bring this up in a separate chart window here. So as you can see on this chart, the Australian CAD is in a very strong downtrend. Last night it made its way back to the hourly moving average, which frequently weak currencies do, and it found resistance there. There was selling into hourly, which usually there are. So coming up to that day, you can have gone short right here. You made a little bit, and when it failed to go back above the hourly again, you went short, and notice it fell from the hourly right here at 34 all the way down to 78. It's a 50 pip drop. Now, most traders don't catch every pip of the move, but if you used our intelligent trailing stop and you sold even the low right here at, let's just say 20, we'll round down a pip, and you got out of it here when the trailing stop got hit, you made 28 pips. And it only takes 10 pips a day to double your account every 2 months. Let's just bring up our Trade Analyzer Planner to showcase that. This has a position sizer to let you review your trades if you use MetaTrader. And let's just say you have a $2,000 account. If you have a 10 pips per day net, that's 50 pips a week, 200 pips a month, your account pretty much doubles every 2 months, 8 weeks. You can see it's now 8,400 in 16 weeks, 17,000 and almost 18,000 in 24 weeks. And obviously you're trading more and more lots as your account grows. But at the end of the year, your $2,000 account has grown to 258,000. That's the power of compounding by getting just 10 pips per day. So let's go back and look at the currency meter again and find some other trades to take today. Now the pound, while it was very strong yesterday, started to lose some of its strength last night. And that's why it's nice to see what's going on with the daily trend. If you see it kind of going above and below, it's extremely weak, slightly weak, extremely weak, slightly weak, and you see some weakness come back in. By knowing what the previous momentum was, you can profit off of that. Here you have extreme weakness, and then about 15 minutes of a counter trend move that had less intensity. The daily trend shifted down again. It was weak before. The weekly and monthly trend is up, so you don't always know. If the weekly monthly trend is up and the daily trend shifts down, a lot of times you only have weakness for a half an hour to maybe 2 or 3 hours at the most. This is kind of a rare exception where the trend started and pretty much continued. But you'd want to trade the pound against one of the stronger ones. At 6 o'clock, the CAD was undergoing a little bit of weakness right there. The dollar and the yen were both strong. The yen had a very strong daily, weekly, and the monthly trend also shifted up. So after about 6 right here, the pound yen sells is the highest probability and the one that I would be focusing on myself. Let's take a look at this particular currency right here, coming up to 6. So the price is kind of chopping around here. It wasn't able to get back above the hourly. So coming up to 6, you might have looked to sell right here, and unfortunately it didn't really continue down too much. Let's bring up our range chart. So looking at the range chart coming up to around 6 or so, this one's been kind of chopping around for a little bit. It's always dangerous getting into a currency. It's been chopping around. It might continue to chop. But nonetheless, if you use our trailing stops to get in, you might have had a short right here, out at break even. Short right here, you made a few pips. And when it's above the hourly, it's usually somewhat risky to sell, especially if you see some strength coming in. But once the strength kind of lets off a little bit, you can see decent amount of momentum, incredible momentum, and then here it has less so. This trade right here is not too bad, and once it gets back underneath the hourly, it's usually a little bit safer to sell. You're short at 33 right here. Our trailing stop would have had you out at 15. Let's take a look at some of the other currencies that you would have been looking at today as well. Again, the Australian, weak all day on all time frames. We had pretty much strength in the yen, so selling the Australian makes sense. As you can see on this chart here, failed to get back above the hourly and fell. You short right here, you made about 10 pips. Short right here, pretty much break even, lost 5 pips. Short here, made 10. And when you have breakouts from below to above the hourly, typically they'll continue. But when all the time frames are down like this, a longer term, daily, weekly, monthly, there's going to be a lot of selling pressure right there. So again, it's always risky to buy a currency when it breaks from below to above the hourly when the longer term trend is this weak. However, if it fails to go higher, usually when they break out from below to above and they do a retest like this, it's going to go up and break out through the high. When it fails to do that, you might have gone short right here and lost a little bit. When it failed to go up again, this is a 1, 2, 3 reversal off the high. You short right here, and you can see it fell from 35 all the way down close to the whole number here. The key is small losses and big wins. You might have a few small 5 to 10 pip losses, and obviously this is a relatively choppy day today in this particular currency. Some days, you'll find 30 to 50 pip trends, which will get rid of your, maybe a couple 5 to 10 pip losses. You might have 15 or 20 pips of losses. You catch a 20 or 30 or 50 pip win, and you're back to even, or you're up money on the day.